if there's political turmoil in France. What's your reaction to this?
Well, the ECB always act inside their legal mandate. They have in the past, they will in the future. And the ECB monitor, as we do, what is happening in financial markets. But the financial markets at the moment are clearly stable. The French economy, from a debt and borrowing point of view, is still stable as well. And I know the ECB will both monitor the situation and always be inside their mandate, as they have clearly demonstrated in recent years.
So do you disagree with these comments where they're out of place?
Oh, I can understand why Minister Lindner made those points. He is, of course, monitoring what is happening within France. He's monitoring the debate that's underway from a public spending point of view. But as president of the Eurogroup, I'm aware of the need to take a perspective of what is happening in France, but also to recognise that our institutions have very clear mandates that they live within. And the ECB, whether it be with regard to France or any other element of the euro area, are absolutely clear about what their mandate is, and always, and have always, operated within it, and I'm confident will continue to do so in the future.
So do you think France's political difficulties will actually create any issues with the ECB?
Well, I'm very much aware that there's an election that's just about to conclude in France. So I don't want to prejudge what will happen here in France, particularly as the people go to make their final decision here on Sunday. But do allow me to make a general point. And the general point is that we all have a responsibility to manage our public finances carefully and safely. That has happened here in France in the past. And the maintenance of that approach is ultimately what allows our economies to grow again, and what ultimately would also allow incomes and living standards to increase at a time in which we're still dealing with the effect of soaring inflation.
Obviously, you've been president of the Eurogroup for many years. You are a counterpart of Bruno Le Maire, the French finance minister, who's been the French finance minister for 7 years since Macron's first election, providing a lot of stability, obviously, in terms of the relationship with EU partners. How do you think that's going to change going forward?
Well, I have to say that Minister Le Maire has been an exceptional colleague. He has led the French economy through so many great difficulties, but I also see him as a leader of Europe. And the difference that he has made at really important moments within the Eurogroup has been immense. And I've really valued my friendship with him and wish him the best in the future.
Are we facing a least stress moment, a debt crisis potentially in France, like Bruno Le Maire has been warning?
Well, again, just allow me to make the general point that we have learned that when domestic decisions are made, financial markets can respond back quickly. And the general clear learning that we have in recent years is about the importance of maintaining market confidence and the importance of maintaining confidence in your future spending and taxation plans. And all governments are aware of that, whether that be the Irish government that I'm a member of, or I'm sure any other government that will be elected.
Obviously, there is an outright majority of the National Rally in France. There is Jordan Bardella, who might become Prime Minister next week. Do you fear some clashes with the EU on fiscal rules as soon as this fall?
Well, I think we should just let the election conclude and allow the French Parliament to form the next government. That's very much a matter for them. And I'm not going to comment at this point on what is still, obviously, a domestic political choice. But again, I'll make the very broad point that cooperation between the Commission and Member States is a really important ingredient in continuing to maintain stability of the euro area and all the members of the euro area. And France has been a really important partner in that approach over the entire history of the euro. I look forward to working with the next French government. I look forward to working closely with future finance ministers of France and doing all I can to make the case for this approach to our public finances and the value of the stability of the euro. And I look forward to a good working and personal relationship with whoever that minister will be.
But, for example, Jordan Bardella has said he wants to cut contributions, French contributions to the EU budget by 3 billion euros in order to finance some domestic proposals. Is that even possible?
But these are the kind of comments that all kinds of different governments make before negotiations begin on the next EU budget. And I'm certain that you will hear many other governments make points regarding them wanting to reduce their contribution to the EU budget or looking for more from the EU budget. So again, let's just allow a new French government to be formed, and myself and all colleagues within the European Union look forward to doing our best to having a warm and cooperative relationship with them. But let's let the election conclude.
It seems like the relationship with Giorgia Meloni, for example, in Italy, has improved. Do you think Marine Le Pen can be compared to Giorgia Meloni, or is she much more anti-EU?
Well, I mean, I think the experience of Prime Minister Meloni in many ways is instructive for the discussion that we will be having here in the future. Prime Minister Meloni has came into office and made some very, very important and I believe right decisions on behalf of Italy, on behalf of Europe, and we have a very constructive economic relationship with Minister Giancarlo Giorgetti, her finance minister. So that is another reason why I am reminded of the value of letting the election come to an end, and when the government is appointed, hearing from them and doing all we can to have a good cooperative relationship.
One quick question on the UK, because obviously we had this stellar victory by the Labour Party with Keir Starmer. Do you think this also has links to what we're seeing in France? Basically, this Labour victory as a signal of, anger after 8 years of consequences of Brexit.
So I think that is definitely an interpretation of it, that the promises that were made with regard to Brexit, many of them in the eyes, I think, of British people have not happened in the way they would have expected. But I'd actually interpret it in a more positive and optimistic way, which is that we are seeing the British government, the British people, make the decision to elect a stable and centrist government. With the majority the Labour government will have, with the kind of people that are leading it, it appears to me the British people have said we want stability, we want competence, and we want a government that can lead the UK for the next 5 years. And I think that's a very positive signal, while of course on a personal level, I wish all the members of the outgoing government the best for their futures.
Finally, one really quick question on Ireland. The Ministry of Finance actually just moved the date of your budget to October 1st. Does that mean we are likely to see elections in Ireland this year?
I'm afraid to disappoint you and tell you the answer to that question is no. I expect the next general election in Ireland will be March of next year, at the end of our mandate, at the end of our parliamentary term. The only reason the budget was changed by a week is we have the Eurogroup and ECOFIN meeting happening in the second week of October, and I can't be in Dublin and Brussels at the same time. So it was changed for that reason and that reason only.
Many political battles to juggle. Thank you so much,
Thank you very
Pascal Donoho, the Eurogroup president, live from this economic conference in Aix-en-Provence.
All right, that was Caroline Conan, Bloomberg News over in Provence. Speaking with Pascal Donoghue, Eurogroup president there. Hey, how about a stock story for you, Caroline? Meta, or us back in the day, Facebook, up 4.7% today, all-time high. How about that? I kind of had, we talk about Amazon and Nvidia and this and that. I kind of forgot about Meta.
It's been one of the best performing.
Yeah,
and
exactly.
I'm pretty sure it's just risen on the back of the fact that Mark Zuckerberg was hydrofoiling in Lake Tahoe on the 4th of July, sipping a beer, right? That's the only reason it's
AI, in my opinion. I'm not buying that at all.
I feel that must be artificial intelligence generated, but so far every story I've read about it doesn't seem to say that it's AI. It's just Elon Musk throwing shade on it. But
I don't know. But he's carrying a beer and a U.S. flag while like wakeboarding. So I mean, how about that? Stocks up 50% year to date is Meta. It's got a market capitalization of $1.36 trillion. That gets your attention. Coming up, political upheaval continues. France enters the final few days of campaigning. We'll discuss the complicated path to power for Marine Le Pen. All right, welcome back here. Caroline Hyde, Paul Sweeney. We are live here in our Bloomberg Interactive Broker Studio. We're also simulcasting on Bloomberg Television and streaming on that internet thing. So head over to, I guess, that youtube.com and search Bloomberg Podcast, and that's where you'll find it all. That works for us. Politics, boy, front and center for these markets. No question about it. We had the UK election yesterday. We've got the French voting over the weekend. And then here in the U.S., I think we have two candidates. I'm not sure. I guess we will figure it out over the coming days and weeks. But in France, that's where the focus goes right now. Election coming up this weekend, this Sunday. Could be some significant movement there. Caroline Conan, she is still in the south of France, and she is still reporting for us. Caroline, can you frame out what the French people are going to do on Sunday? Where could this thing go?
It's actually very interesting because, you know, I've been covering this economic conference in Aix-en-Provence for at least a decade. And usually this is the beginning of summer, you hear the cicadas, everybody is in a positive mood. Not this time. Today is the last day of campaigning for the snap elections on Sunday. There is a lot of anxiety on everyone's faces. All these executives wondering what's going to be the outcome on Sunday. And for the first time, there's actually no politicians here. So no ministers from Macron's government, because obviously most of them are going to lose their jobs on Sunday. Now, the prospect of an outright majority of the National Rally is a bit unlikely now, given the recent polls actually showing that the National Rally would get between 190, 250 seats. That would be short of a majority. But still, there is still a lot of concerns about potential clashes with the EU. I had the Institut Montaigne director telling me earlier today that there's no need to despair, but there's going to be a lot of attention for the budget in the fall. And also, I had the CEO of Neoen, big renewable, who's very concerned about less focus for energy, less focus for renewable. I even had a SIA Partners executive who was telling me, you know, 2 months ago, Macron was organizing this big Choose France summit, inviting hundreds of international CEOs, talking about the attractiveness of France. Now the question is not choose France, it is why France?
Well put, Caroline. And what's notable is Marine Le Pen of the National Rally has been doing some interviews, and it feels as though she's basically saying, like, don't believe these exit polls. I still could have a chance of having a majority here. But she's also warning, basically, that the country's going to be at a standstill until Macron is legally able to dissolve Parliament in a year. And so is that what businesses brace for? Is that what other politicians brace for? Just nothing?
It's actually possible, and in fact, gridlock is possibly the best scenario for the financial markets, at least. That's what we've been hearing from all the analysts and strategists over the past few days. Even Morgan Stanley, a strategist, saying yesterday it's time to buy French stocks because actually, even if it's outright majority for National Rally or if it's gridlock, this is going to be a positive story for French stocks. We'll see the situation on Monday once we get the results in. But clearly, we had more than 200 candidates pulling out of the race for this runoff in order to try and block the National Rally, in order to try and have only duels on a Sunday in many of these constituencies. There's going to be a lot of question also about what the moderate centrists do. Do they actually support a far-left candidate when there is a far-left against a far-right in their constituencies, or are they going to abstain? That's a massive question for the moderates, because they have a big dilemma when they have to choose between the far left and the far right. You know, Emmanuel Macron has already ruled out he would govern with a far left candidate. So potentially, if it's not an outright majority for the National Rally and we get a hung parliament scenario, he may reach out to a center-left personality, and that would be obviously the least scary scenario for the markets.
Caroline, this weekend, how far to the right do you think Marine Le Pen can actually move this government?
Yeah, I mean, technically, the question is, what is she going to do on foreign policy? What is she going to do with Russia? She's been trying to distance herself from Vladimir Putin over the past few years. But, you know, a few years ago, she did receive a loan from a Russian bank. So there is a question on defense. There is a question on what it means for Ukraine. Then, of course, the next question is how big of a showdown could that mean between France and the EU, especially for the budget in the fall. You know, Jordan Bardella, the National Rally president, has said he would cut French contributions to the EU budget by at least 3 billion euros. Even if that's technically difficult, that clearly shows you that there is an anti-EU feeling within the National Rally, even if Marine Le Pen is not talking about the Frexit anymore, like she used to back in 2017 when she faced Emmanuel Macron in the presidential election.
Carine Conan doing, well, the best of work in 40-degree heat. We truly appreciate you working what is going to be a long weekend as well. Caroline Conan on the ground in Aix-en-Provence. And you know, Paul, we bring it back to politics close to home as well. As we sit here in New York, President Joe Biden is basically looking to quell those ongoing concerns over his age following last week's presidential debate. Bloomberg's Anne-Marie Horan, of course, sat down with the Ukrainian president, and we were just talking about Russia, Ukraine, and the impact with France. But what did the president of Ukraine have to say about who will take the Oval Office? Take a listen.
You're 46 years old. Would you do your job at 81?
Oh, wow. I don't know. It depends on many things, of course. It depends on your health and who is around you, your team, and etc. And the United States now not in war. I think being in war is a little bit and other things. I don't know. I only can to wish good health.
You seem to skirt that one rather expertly, Joe Matthew. Let's bring in Joe Matthew as we, of course, see what the international view is on President Biden's ability to continue to run as the Democratic nominee. But also, ultimately, we get some proof points with an ABC interview later today.
Yeah, and don't ask me what I'm going to be capable of at 81. If I'm getting out of bed, I'd say that's a win if I'm upright. But look, it's a big test. It's going to be a week-long kind of a test. They've set up an obstacle course, essentially, for Joe Biden to run the track here and show people that he can do it. And you're right, it starts with this interview. They're going to do it in Wisconsin, where the president is also holding a rally today. He'll have the panels up. He'll have the teleprompter, which we keep hearing is not good enough. So this unscripted interview is part of it. I'm really curious, guys, to see how long this goes. Does he give Stephanopoulos 45 minutes, or is this a 10 to 15 minute kind of conversation here? Do they do the walk and talk? How difficult would these questions be, knowing that this is a former press secretary to Bill Clinton who's doing the interview? The administration, the campaign, very careful about selecting the venue here and the interviewer. Next week's going to be a different story. He's going to go to Philadelphia over the weekend, and then next week it's the NATO summit here, and you can't fake that. That's time to be real, President, as you talk about, with the world watching, world leaders here in Washington, and he's going to hold the solo news conference at the end of that summit. And that's a difficult environment to control. This isn't going to be with another world leader. It's not going to just be two questions. And that will be a chance for people to see Joe Biden again a week from now with probably a lot less rest and a lot more stress following those NATO meetings. So let's take this 1 week at a time, even as people start talking about who might else be considered a potential candidate for the nomination.
Hey, Joe, is there any sense in Washington that maybe the Democratic Party might be working maybe a parallel path at the same time here, such that if we come from a week from now and it does not go well for the president, then the Democratic Party is ready to go to that next step? Is there a sense that there's stuff going on in the background?
Well, there is, but I think if you asked Kamala Harris, she'd say, you're talking about me, right? Because you know, even the night of the debate, we were hearing names like Gavin Newsom, who was on the air with us, Gretchen Whitmer, you know, various Democratic governors who could take up the mantle here. But Kamala Harris has a pretty good story to tell, and in fact, better polling numbers than Joe Biden in some cases right now. And I think that if we were in a world in which, you know, the elders, say Obama and Clinton, sit down with Joe Biden, or Jill Biden convinces him not to run, the first person he will likely look to is Kamala Harris, as opposed to wiping the slate clean and starting starting with some sort of mini primary, as some have suggested. If it is, in fact, a backroom deal where Joe Biden steps down, takes Kamala with him, and we have a whole new ticket out of the blue, you're going to hear rigged, you're going to hear corrupt backroom negotiations, smoke-filled rooms. I don't think the Democratic Party is looking for that right now either.
We do things with an economic and market leaning, of course, Joe. And to that end, has there been anything factored in on the fact that the market is really trying to understand whether or not we see a more difficult fiscal position, no matter who comes into leadership? What have you made of sort of corporate America's reaction? There's been a lot from donors in particular.
Donors who in many cases are looking down ballot, which is really interesting. Although I will remind everyone that Joe Biden had a real solid fundraising period after the debate that was supposed to be such a disaster that brought us to this moment now. They made $38 million in the 4 days starting on Thursday, which is pretty impressive. It's more than he's seen in some months' time here. So, look, I don't know if the market is too concerned about which Democrat we're talking about here, if it's a Joe Biden, a Kamala Harris, or somebody else, as much as that realization on Thursday night that, hey, this Trump 2.0 idea could be real. And to see things like solar stocks moving, to see banks moving, to see people try to place bets on what could be a return to a Trump presidency has been pronounced.
Joe, do we know who really has the ear of President Biden? Is it Joe Biden? Are there some folks there that we're not aware of? Is it former President Obama and or Clinton?
I think Jill Biden is probably the answer to that question, and I don't think we all prepare to be, in the inner circle there. But he's had a strained relationship with Barack Obama over the years, and look, this is a family that's very tight. When they went to Camp David to have the photographs taken with Annie Leibovitz last weekend, it was reportedly Jill Biden and Hunter Biden who convinced him that he needs to stay in this race and that this is, in fact, the right way forward. It's probably going to take a realization inside that close family circle or a reckoning based on what happens over the next week or so to decide what he does next. But the administration is trying to check itself as well here. Karine Jean-Pierre held a very difficult news briefing on Wednesday in which she said the president had not seen a doctor after Thursday night. It turns out he had. And one of the spokespeople for the White House had to come out and clarify that yesterday here. I'll also remind everybody that lawmakers return to Washington next week, and we've got a third Democrat in the House now, and Congressman Seth Moulton calling for Joe Biden to drop out of this race. What are those numbers going to look like after everyone gets an earful at the 4th of July parades and picnics this weekend? This is all you better believe anyone is hearing about in their home districts. They come back Monday night, and a lot of them could be swinging, and that could really be an interesting backdrop for this NATO summit that the president's trying to conduct at the same time.
Joe, I hate to ask hypotheticals, but hypothetical I'll ask. When, if we hear something, would it be?
Great question, and I can't pretend to know. I'll remind everybody that in just, 13 days, we have a Donald Trump accepting the nomination in Milwaukee. We're going to be getting on airplanes next week to go cover the RNC. He's going to have an announcement on a vice president. That's going to suck up a lot of the oxygen out of the room. So I suspect that might buy Joe Biden another week or two as well. It's mid-August, the Democratic convention in Chicago. Is that the deadline? I'd say that something probably needs to break before then. If we're taking this a week at a time, let's see where we are in that news conference next week.
All right, Joe Matthew, thank you so much. We appreciate that. As always, Joe Matthew, he's co-host of Balance of Power. He is our one of our key voices down in Washington, D.C., and what a time it's going to be here. And I think the way Joe's looking at it week to week, let's see, he's got some big events coming up in the next week that'll give people probably more data points, and probably himself as well, more data points about what to do going forward. So I guess that's kind of where we are here, week to week.
I was at a July 4th party yesterday, and a friend of mine had a T-shirt on saying "a bad day to be British." Obviously, he meant about 4th of July. It was ironic that there was the British election going on at the same time. And then I woke up to the news with the fact that Keir Starmer, in his 60s, he's 61, is the oldest ever first-time running prime minister.
Is that? And oh boy,
in your 60s, that's
exactly
to be your first time. Obviously, Winston Churchill did it till a grand old age. This is Bloomberg.
All right, we're going to have much more coming up on the UK election. This is Bloomberg.
make a start today with the simple acknowledgement that public service is a privilege. From now on, you have a government unburdened by doctrine, guided only by the determination to serve your interest, to defy, quietly, those who have written our country off. You have given us a clear mandate, and we will use it to deliver change.
All right, that was UK Prime Minister Keir Starmer. Day one here after that landslide victory just over the last 24 hours. Just amazing move there in the UK. We're now awaiting another election in France as well this weekend. So very busy on the UK front and on the European front in terms of change in governments across the board here. So that is a lot for investors to keep an eye on. And UK markets, they're advancing here on this Labour move. We have the pound to its longest winning streak in 4 years. So definitely some movement in the markets. Dan Hansen joins us, Bloomberg Economics. He is in London. Dan, what's your view here of what we just experienced over the past 24 hours in the UK politically?
Well, I think, to be honest, my take on it has been it's been a very sort of predictable election. Like, this is a result that was widely expected, and it sort of marks quite a big change from what we've had in the UK sort of in the 2019 election, 2017 election, and really ever since Brexit. So I'd say there feels quite a bit of calm, and you can see that there sort of in the market pricing that you've just shown that markets are taking it in their stride, because this result really was priced in. And this idea of stability, and you got a bit of it there from what we heard from Keir Starmer, is really Labour's pitch. It's sort of taking government out of the public's eye, being in the back seat, but ensuring stability all round, and hoping that will be the source in future of stronger economic growth.
Extraordinary to think that actually British stocks are still near a record high. Obviously, FTSE very internationally focused, but bond volatility has been quelling. Volatility is basically what we're talking about. A less volatile government situation, a clearer majority, a leader that is ultimately able to lead. What does that mean economically for the UK and for a Bank of England that has been eyeing further rate cuts, has got a grip on inflationary pressures?
Yeah, it's really interesting, Caroline. So I think in the near term, or when I say near term, I'd probably say over the next 6 to 12 months, I think the new government is going to benefit from a pretty decent economic picture. You know, growth has picked up in the UK. We had a recession, a very mild recession at the end of last year, but growth has picked up. Inflation's in and around 2%, as you alluded to there, and I think the Bank of England is pretty close to cutting interest rates. I think, you know, our view is that they could well go for the first cut in August. I think the question really for investors is about the medium-term picture, because the election campaign, at least for Labour, was very, very modest in terms of their promises. And the question, I think, is can they really deliver a step change in the UK's economic growth, a sustainable step change in the UK's economic growth? And that really is the question everyone's asking. But in the near term, I think the picture's pretty positive, and I think, you know, we're going to get Bank of England cutting interest rates relatively soon.
So, Dan, that's kind of where I wanted to go here. The new Prime Minister talking about growth being one of the pillars here. What, from an economic policy perspective, can this new government really do to spur growth in the UK?
Yes, I mean, great question, Paul. So I think one thing to remember in the UK, and this is true across Europe and in fact across the Western world, that fiscal space is extremely limited, and the manifestos that we saw from both the Conservative Party but also the Labour Party reflected that fact. So a big part of the pitch, as I said in the answer to Caroline's question, is about stability and the hope that there is, if you like, there is this relative, I would call it, certainty premium on the UK, because if you look around the world, in Europe, you spoke about the France election at the top of the show there, I think there's a lot riding on the idea that the UK is going to be seen as a bit of a safe haven, if you like. So I think that will get you some way. Whether it gets you a sustainable path of growth higher, Keir Starmer's talking about 2.5% growth for the UK. I think that looks quite optimistic to me, but nonetheless, there is going to be a benefit, I think, at least in the near term, a sort of cyclical boost to the economy from that, a reduction in uncertainty.
I mean, they've been trying to lean on artificial intelligence, a leadership there when it comes to regulation, whether or not there's a leadership from an actual enactment and productivity perspective. But what's interesting, Rachel Reeves, the new Chancellor, as we understand, promising not to basically raise the 3 key taxes, but she does seem to be wanting to focus in on housing. They're going to have a new sort of national publicly owned energy company, and energy was a lot of the inflationary pressure. But would a reset of the relationship with the EU be one of those fuel to the growth fire?
I think it would be. Now, and I think the question is, first of all, has the EU got the appetite to come to the table and talk about it with the UK, with everything else that's going on within the EU itself? But I think also, there is definitely a case there for looking at bits of the deal that the UK currently has with the EU. The point and the question about, I think, a customs union and maybe returning to the single market, that's probably too far-fetched, I think. But I think there are bits of the deal that could be looked at around alignment, around regulatory alignment, that could produce a growth benefit. But I think the one thing to remember with trade deals generally is that they take an awful long time to adjust and change. So to sort of bank on that as a source of growth, particularly in the near term, I think that's probably far-fetched. Maybe, over the 5-year Parliament, that might be something, we can think about further down the line.
It's been great speaking with you, Dan. Thanks so much. Go get a pint. Dan Hansen from Bloomberg Economics. We appreciate him. And meanwhile, Paul, look, we've got to talk retail, right? We're going to be discussing how closer to home maybe the wealthiest are still able to spend, but we are getting that sort of slightly strained middle once again. And it's meant that a lot of these luxury department stores are trying to eke out efficiencies. Yep. We understand today Macy's actually rising on the report that Ark House and Brigade have raised their buyout offer for the department store operator to $6.9 billion. We've also got Saks, Neiman Marcus, a deal there going through potentially. Andrea Felsted, Bloomberg opinion columnist, joins us from the UK once again. We're making these Brits work the day after they voted. Andrea, just remind us of the driving force for wanting assets like Macy's, which of course owns Bloomingdale's.
Well, Macy's is quite a special case because it's got a lot of real estate. Bloomberg Intelligence have estimated it's got about $8 billion of real estate, and that really is what these bidders are after.
I should tell you, Caroline, whenever I do look at an M&A story, I go right to MA Go because I need to see which bankers got paid here. So on the Saks deal for Hudson's Bay's, Saks advised by Bank of America, Merrill Lynch, and RBC Capital Markets, and the seller, Goldman Sachs, Guggenheim Partners, and Morgan Stanley. So everybody's getting paid there. Andrea, what does this tell us about, the consumer, retailing, trends? I mean, it seems like a lot of consolidation in a relatively short period of time here.
That's right. The thing about the department, there's two things going on. You've got the department stores are under a lot of pressure. We are shopping online. They've also got tons of competition. Years ago, you just went to a department store for your autumn wardrobe and your spring wardrobe, which you bought in advance of the season. Now that we're buying online, the brands are going direct. They've got, their own websites. They're opening stores, and not just in the, the two coasts, in sort of middle America, all across the country. They've got their own stores in malls. Plus, you've got these online challenges. Even luxury resale is growing. So there's tons of competition. Plus, the luxury consumer is under pressure. And we're not talking about the very wealthiest. They're still splashing on Hermes handbags, Brunello Cucinelli cashmere. It is that squeezed middle, the cohort that during the pandemic they saved a lot of money. They weren't going out to eat. They weren't traveling. They were spending that money on Gucci handbags, Rolex watches. Not only are they now want more experiences, but they're also facing inflation and higher borrowing costs. And it's really that cohort that is squeezed. And that's a lot of pressure for these businesses to cope with, hence the consolidation.
Andrea Felsted, we love having you on. Thank you so much, bringing us all things consumer. Meanwhile, Paul, I actually rent most of my stuff.
You do rent the runway?
Yeah,
That is a great idea.
Great idea.
I never even thought about it, but it makes so much sense.
Their market cap might not reflect how great a business I think it is, because Rent the Runway has, it IPO'd in excess of $1 billion. Its market cap now but $54 million. I mean, it is absolutely eroded.
Was that because people aren't going back to work as much?
It's actually, I think people are using it. It's such a hard business model to make square in terms of a margin. You know, they're having to ship. I get everything of mine cleaned. I'm getting like 5 or 6 outfits every week. I don't know how they make money.
I don't have, it is. It's a cool idea, though.
It is. This is Bloomberg. Welcome to our Bloomberg TV and radio audiences worldwide. This is Bloomberg Markets. I'm Caroline Hyde alongside Shonali Basak.
Absolutely. And Caroline, we have quite the day here. It was supposed to be a boring day, wasn't it? But we are looking at a day here where you're seeing still a bit in the market, and certainly the bond market after some stunning data, plus a lot of things to talk about on the geopolitical front with elections abound.
You name it, we're going to be on it. Meanwhile, we're going to talk a bit of crypto as well. Let's get to the markets for a moment, though, because, well, there has been actually a bit of a rally on our hands, all thanks to, of course, what seems to be an ability for the Fed to continue to cut into the rest of the year. Maybe even September on the table. We'll see. We'll discuss it with Mike McKee. But for now, we've seen tech stocks see a bit of a reprieve, a relief. Look, it was the revisions that people were slightly worried about into the previous reading of non-farm payrolls. Nasdaq currently up 0.8%. The bond market moves significantly, particularly at the short end. I'm shining a light on what's happening in the 10-year, down some 8 basis points, but you keep a keen eye on what's happening with the 2-year, screaming in some 9 basis points, let's call it once again. We're talking British pound, of course, UK elections, some lack of volatility for the future. Keir Starmer wins with a landslide majority. The pound goes higher, the best performing currency on the G10. I'm looking at crypto, though, currently down 2.8%. Look, it's off of our lows, but still there seems to be pressure, selling pressure, maybe from Mt. Gox, selling pressure, maybe from the German government. We are currently trading lower, the lowest since February. Move on to what the S&P 500 is up to, because remember, we have been at record highs time and time again. The S&P 500 basically up 0.3% on the day. Volumes muted as we have the party after the party of July 5th. I'm also keeping an eye on what's happening with Eurozone stocks, though, and we're currently seeing the MSCI UK ETF, that's up 0.4%. Eurozone also had been trading higher. The euro is up 0.1% versus the US dollar as we head towards that French political moment on Sunday as we see that second round of voting. Gold, maybe a bit of a safety trade. We're up more than a percentage point as we see perhaps a little bit of weakness in the US dollar. But we've got to get to all of this, Shanali, with one key economist in our midst.
Our in-house economist, aren't we? That is Bloomberg's Michael McKee, who is joining us on the heels of that jobs data this morning. And we were talking about how we are looking at a bit of the bond market as strong as to push the 2-year yield down to a stunning level of 4.60. But as you pointed out to us during the break, that doesn't mean everything, does it, when it comes to the rate cuts?
Well, at this point, investors are still cautious because they've got a lot of news coming up next week that could influence this whole September debate with CPI and Jay Powell twice on the Hill. But we are seeing a gradual move in Fed funds and overnight index swaps in terms of pricing in September. We were at about 70 basis points of a move in on Wednesday when we all went home. And now Fed funds are at 84 basis points, and the OIS are coming in at 77. So a gradual creep into September is what's been happening now. I suspect we'll hang around this level, and then as we get into next week, people are really going to have to be ready for some big moves.
Big moves when we look at the CPI and indeed Jay Powell. What we were all reeling from Wednesday was the services print that was much weaker, well, at a 4-year low. Is there any worry coming from the market yet that this could be quite a significant slowdown, or is this like a Goldilocks slowdown that we seem to be hitting?
So far, it seems to be Goldilocks. The price that we had on bonds wasn't the price that you would put on the economy as we have it now, or at least as people believe it now, so they adjusted. But nobody at this point is thinking the economy is going to fall off the cliff. We saw weak hiring in the services PMI, and then we got weak services hiring in the jobs report. So it all kind of reinforces itself here. The question is, do we continue to see a slowdown, or is this kind of about what we're going to have?
Mike, what do you think that the jobs report means in terms of the totality of the data that we're bringing in?
It's the second most important thing behind the inflation indicators. And the most important inflation indicator is going to be CPI this month because, A, it comes out a lot earlier than PCE, and B, it's much more detailed and easier to break down where the inflation is. It's not the target. The CPI is not going to get to 2%, but it will tell us which direction we're going, how fast. And that's what the Fed wants to know, that we're still making progress, and they would love another month like last month where it picked up.
We'll see, indeed, what we do get from a CPI print coming next week. Mike McKee, all over the numbers, the data for us, and indeed a bit of the market reaction. But where do you invest in when you're seemingly navigating towards a Goldilocks slowdown here in the United States? We've got the perfect voice for you. What a stellar career. Michael Green, Chief Strategist at Simplify Asset Management, joins us for more. And I mean, I'm really interested, Michael, in your take. You're really thinking about how we can increase, well, access to investing, particularly through cheaper ETF options and the like. But your take on ultimately how we have seen this played out. We're seeing a bond move today, but are stocks still going to be at these record highs as we do navigate what is this slightly cooler US economy?
Well, I think there's a real bifurcation, unfortunately, in the market, where when you describe stocks at all-time highs, that's a very narrow description. Within the S&P itself, you're actually looking at the equal-weighted S&P, effectively flat on the year. A very small number of stocks have navigated this advance. If we go back further, we look at small cap stocks and do something as extreme as look at the median stock in the Russell 2000. It's off 20% from its highs in 2021. So this recovery in stocks at all-time highs, I think, is actually a misleading statistic. It's very focused in a few stocks that are both very large and in no need of capital. If you happen to need to borrow money, if you happen to need to issue shares, if you happen to need to get your private business public for liquidity purposes, these markets are largely shut.
Unless you're an AI company, of course, and therefore...
Unless you're an AI company. Right?
And I'm interested as to whether we start to see that spread. Many have been talking about investing in energy and infrastructure because that's the other sort of spin-out effect of artificial intelligence, whether or not we get that productivity boost, which might indeed impact jobs in the longer term. But, Michael, how have you been playing the narrowness of the bets of AI, and can they expand?
Well, I'll be very straightforward. Like most in my shoes, I've actually been playing it quite badly. So I would encourage you to be thoughtful about that until I didn't have, I guess. No, full candor and disclosure. If I'm looking at the environment that exists right now, this narrowness of the market, this focus on the idea of a build out of AI is so reminiscent of the telecom build out and the ISP build out associated with the .com cycle. People are ignoring one aspect of it, which is the processors that are currently being deployed into artificial intelligence. The NVIDIA type chips are very power intensive, but there are alternatives being developed. That's the miracle of capitalism and innovation. When we're confronted with constraint, we actually figure out solutions because people pay us for it. And so we're already seeing tremendous advances in terms of reducing the energy intensity of that load. I would expect that to play out in the same way that we saw incredible advances in switching technology that meant that much of the infrastructure that was deployed around the telecom cycle in 1999 to 2000, we ultimately found out we just didn't need it. And it created extraordinary clearing prices that we all benefited from in the future. My hunch is we're going to see something very similar with AI. It's what's called a positive bubble. It's financed an incredible build out. Now we get to see if that build-out becomes available to us at much lower costs than we initially expected.
Hey, Michael, how do you think about the play here? If you say that the market doesn't have a whole lot of breadth and you're not seeing all boats lifted in that AI boom, when you're seeing NVIDIA break so far away from the pack and people betting on those big ticket names, how do you have confidence finding other areas to really bet on here when not all boats are rising at the same pace?
Well, the one thing that I continually remind people is you need to invest for your needs, not for the broad needs or the need to keep up with the Joneses. And so we're facing an investing public that is increasingly aged, increasingly looking for security and income. We're being offered that through extraordinarily high real yields on U.S. government tips and various other types of bonds that candidly nobody wants to pay attention to because we've become so accustomed to the idea that you simply save in the S&P 500. That's not saving. That is a speculative investment. Stocks tend to rise over time. It's worked out extraordinarily well. But the easiest thing to do is look at your current financial situation and say, can I actually meet most of my objectives with dramatically lower risk, given the drawdown that we've seen in bond prices and the increase in yields? And a Federal Reserve that candidly is telling us that they are restrictive and going to have to cut. This seems like a fantastic opportunity to take stock of your investment situation and reduce your allocation to equities before others do so for you.
It's interesting because there's a lot of question on how much cash you hold on to in an environment like this where you're still seeing a lot of bullish sentiment, though a lot of fear under the surface. How much do you keep in cash?
Well, I am, as I indicated at the start, I am cash rich at this point. My focus is very much on preserving the opportunity for investment in the future. I think that there are going to be incredible opportunities as people begin to capitalize on the advances that we're making in artificial intelligence. I think that there will be incredible opportunities to reinvent American cities as we watch the commercial real estate debacle play out. Those will all require capital when the time is there. It just doesn't feel that that's right now.
Just looking at your bio is fascinating, Michael, and you were founding and managing the New York office of Canyon Capital Advisors. You were working with managing Peter Thiel's own money, but also with Soros. And of course, Soros, well known for his big bet on the pound that went very right. I'm interested and ultimately on what your view is of US being the only game in town. Thus far, it has sucked out all the oxygen in the room, but we are seeing SK Hynix, you are seeing AI players, Samsung do well on the day. There has been an interest in Asia and emerging markets, ex-China, on the back of AI. Have you seen that anywhere else? Are you looking outside of the United States? Are you people you manage money for doing that too?
Well, we are always seeing interest in people putting money abroad, right? India is capturing a lot of attention as kind of the next China. We at Simplify have funds that are allocated to that. But with that said, I think the kind of most important thing to remember when you start thinking about where do you put your money or how do you think about capitalizing on an international basis is the manner in which we invest has become increasingly systematic and passive. The vast majority of investors by number and now by dollar value are simply putting money into broad market indices. In the United States, that takes the form of total market funds. That means there's no restriction on how small caps can fall as an asset class. We used to think about allocating 10% of our assets to small cap. That meant ultimately that small caps would remain relatively close to 10% of the investment opportunity. When you switch to a total market fund, you remove those restrictions and the largest stocks can become larger and larger relative to the smaller stocks. The same thing is happening on an international basis. If you step outside the United States and you look at many of the plans, for example, in the UK, or you look in Australia with their superannuation funds, they very typically will be allocated to passive strategies that place no cap on where the U.S. ends up as an investment destination. They're simply trying to stay constant with the market capitalizations. That means that there is really no limit to how large the U.S. becomes relative to the rest of the world. It has very little to do with valuation. It has almost everything to do with the mechanical properties of the system that we've built at this point. And so unfortunately, I think that actually ties very closely to, you mentioned George Soros and the pound. The rest of the world has largely tried to pursue currency stability.
Michael, thank you for joining us. That is Michael Green, who is the chief strategist at Simplify Asset Management, certainly has experience over a multitude of asset classes. And speaking of asset classes, we're going to take a look at a couple stocks we're keeping an eye on the day here, because we are taking a look at Tesla, and it is flirting with green territory on the year here. Very interesting. It has been between gains and losses, down on the day, still down on the year, but pretty close to breaking even for the year. Also keeping an eye on Macy's, because of course there is a report out there of potentially an increased bid, an investor group raising a buyout offer. Keep an eye. We're going to bring you more stocks throughout the hour, of course. This is just the start of it, isn't it, for us, Caroline?
Yeah, I'm going home in a minute, Shomali. I'm going back to the UK. We've got news from the election and what's happening with the Labour Party being back in power. This is Bloomberg.
everything.
We're going to turn now to domestic politics. We're going to talk about the U.S. election season, of course, heating up in a big way. And President Biden is sitting down today for his first big TV interview since the debate performance last week, widely considered poor. We're going to bring in Rick Davis, partner at Stone Court Capital, to talk about his expectations. Rick, what are you watching for tonight? Because, of course, all of America's eyes are on this interview, but so are the eyes of a lot of members of the Democratic Party thinking about what to do next, as well as donors for the Biden camp.
Yeah, I think you summed it up pretty well. There's a crisis of confidence within the Democratic Party over the top of the ticket. The disastrous debate performance last week, just 7 days ago, by Joe Biden has caused a lot of donors and a lot of operatives to start questioning whether or not they have to make a change. And this interview with George Stephanopoulos is, I think, really critical because it has to show Joe Biden able to perform without a teleprompter, perform without notes, be able to have a conversation with a very skilled, operator media-wise, but also with a great political background, George Stephanopoulos, who will run him through his paces tonight for an hour-long interview. And honestly, it's a high-risk situation because if there's any hesitation, if there's any confusion, if there's any kind of stilting of a performance like what happened in the debate, I think it really could be the death blow of this Biden campaign. Otherwise, he does have the opportunity to try and reassure people that he has the capacity not just to be the candidate of the party, but also to potentially be president for another 4 years, which is really one of the big questions to be answered tonight.
The reason we turn to you, of course, is because you can so well sew together what politics means for markets, what politics means for economy, and in fact, the fact that you were a campaign manager as well, Rick. And from your expertise on the campaign, how has the Biden campaign managed this? How have they, because they feel united, but it just feels united against a wave that they're working against.
Yeah, sometimes you have to let the candidate, in this case Biden, be Biden. Campaigns are built around the idea of lowering risk. And so it's not unusual for there to be Biden in a bubble, Biden overhandled by staff, Biden overscheduled. All these things are pretty typical in a campaign. But when you do have a crisis, there's no remedy for the crisis other than the candidate himself or herself standing up in front of a crowd, standing up in front of an interviewer, and actually being able to have a successful moment. And tonight could be the most important moment for Joe Biden because, he's coming on a very critical period of time. Summers are usually not this important, but in this case, in this campaign, having been so close for so long, every little step matters. And in this case, this step is a big one, and he's going to have to do it alone. He's not going to have anybody telling him what to say or do. He's got to get out of the bubble and prove to the American people and, frankly, to the Democratic Party that he's the guy they can invest in for this year.
Rick, I'm really curious also, when you look at the interview tonight, how much of it is about the policy, about the progress made during the Biden term and the race itself, and how much of it is about Biden's performance?
I've always been curious, frankly, almost throughout this administration, why the Biden folks haven't focused more on the economy. They've actually got a story to tell here, and yet they constantly deflect themselves into other policy areas, student loans, things like that, that actually don't have the saliency in this election. This election is all about, are you going to be better off in the future than you were under Donald Trump in 2016 to 2020. It's almost like you have to skip over the Biden economic performance, and they seem interested in doing that too. They talk very little about it. I will be very curious to see if Biden is able to articulate tonight the successes he's had in navigating a very treacherous economy over the last 3.5 years, and whether or not he can then lay out a clear vision on what he wants to do in the next term, because that is what most of these swing voters are deciding on, is whether or not their economic self-interests are going to be better under Trump or better under Biden.
Rick Davis, partner at Stone Court Capital. Thank you so much for walking us through what to watch a little bit later. Meanwhile, clear vision is exactly what now the British public want after a clear and decisive win coming from the new Prime Minister Keir Starmer as Labour sweeps to power over the Atlantic. Now, we did hear from the new Prime Minister a few hours ago as he stood outside Number 10. Let's just listen.
We did it! You campaigned for it, you fought for it, you voted for it, and now it has arrived. Change begins now.
I stand corrected. That was the Tate Modern. That was earlier, even before he then stood outside Number 10, of which he's now taken entry of. Someone who's been following the ins and outs for the hours is Bloomberg's Ewan Potts. And Ewan, there is a read here that we will get calm, less volatility, a clear landslide victory. Isn't it incredible to think that actually we were talking, though, about a landslide in 2019 for the opposite party? And so really, will this signify calm? Will this signify a clarity of thought and vision for the UK?
Caroline, yeah, it is quite the turnaround, isn't it? Amazing what happens in 4.5 years. Now, you may have seen some July 4th fireworks in the US. We had plenty of fireworks in our July 4th election here in the UK. Britain has a new Prime Minister, Keir Starmer, winning with a landslide victory, 170-seat majority, roughly. Just to put that in a bit of context, Tony Blair scored 179 in his landslide back in 1997. So it was a big win for Labour. The key pledge, the key election slogan was one of change. And after 14 years of Conservative government, the British public made very clear they were ready for change. It has been a turbulent 14 years, not just that Brexit vote and all those interminable negotiations with the EU, but a pandemic, the Partygate scandal involving Boris Johnson, and of course the energy crisis and the big inflation spike, much like you've seen in the US. So that's a platform of change went down very well with the British people. He also pledged to end the chaos, to use Keir Starmer's words. So really looking for a fresh start for the UK. It was really a crushing election defeat for Rishi Sunak's Conservatives. The party of Boris Johnson and Brexit categorically rejected by the British people. It was actually the worst election result for the Conservative Party in their history. This party dates back to 1832. So this is a really momentous landslide win for the Labour Party. And as you say, a big change from back in 2019.
Ewan, one thing a lot of the world is watching, of course, is not just the changing politics in the UK, but the fiscal situation in the markets as well. And by the way, thank you for being with us and keeping such great energy through all of the coverage that we have seen. Of course, a long day. How have investors reacted to the future of the UK?
Well, of course, the Labour win has been priced in by markets for some time now, not just during the course of the campaign. The Conservatives really didn't manage to shift that poll rating at all during the campaign. They tried spending lots of money. They tried launching lots of new announcements, lots of policy announcements. But that poll deficit with Labour just didn't budge. So the markets have priced in that Labour landslide, the Labour victory now for really the whole course of this year. So investors are expecting this. I think there's a certain amount of optimism in markets that this will bring some stability. It has been a very unstable situation for the UK, particularly politically over the last few years. So I think investors are looking for a bit of stability. But it is a difficult fiscal picture for the incoming government. There is really little money to spend. They've said their first priority will be economic growth. They'd like to get growth back to the 2.5% on average that it grew in terms of GDP over the course of the Blair government in the late 90s and the early noughties. But of course, we are in a different environment now, so boosting that growth is going to be difficult for the incoming government, but they say they're determined to do that. And they've also sounded a very cautious note on borrowing as well.
Ewan, we thank you so much for joining us late in the UK. That is Ewan Potts, of course, of Bloomberg, covering the election there. Caroline.
I mean, we've got a lot to dissect when it comes to politics. We're going to have plenty over in Paris as well. But more broadly, we want to be looking at what the market reaction is to the macro, the fundamentals here in the United States. We have indeed been digesting those jobs numbers in June. And look, Goldilocks, many would say, yes, a big revision down from the previous month. But actually the fact that we're seeing a cooling labour market, the fact that inflationary pressure is just dialing back a little bit. We can dig into the nitty-gritty with Stephen Kramer, CEO of WorkJam. That's coming up next. Stick with us. This is Bloomberg.
We're going to turn to the job market, of course. Jobs Day was a big day today. It was a big part of the week, big part of the month, and a big part of the story of the Federal Reserve. The market showing some signs of cooling. The jobless rate, of course, rose to the highest since June since late 2021. And we did see payroll growth slowing, but we did have payrolls coming in higher than economists had expected. We're going to bring in Stephen Kramer to talk about the moment we're in. He is the CEO and founder of WorkJam, a digital platform focused on promoting the potential of non-desk workforces. And if you think about the cater of people that you work with here, Stephen, how do you think that they're taking in the data that is coming versus the reality that they're experiencing?
Right, great question. Well, first, let me start off by saying that 50% of the U.S. workforce is made up of frontline workers. And when we talk about frontline workers, we're talking about non-desk workers that are in the field in segments like retail, hospitality, leisure, people that work in distribution plants, distribution centers, and so forth. So while the unemployment rate actually rose to the highest that it's been over the last 2 years, if you dig into the report, what we're also seeing is that there's massive influx of new hiring that is happening on a seasonal basis, particularly in restaurants, hospitality, and leisure, as a result of a surging amount of individuals that are traveling in the U.S. right now. I think that right now, July 4th weekend, it was reported that there's 71 million travelers that are on the road or in the air, and that's a 5.5% increase from last year.
How do you think about this in the context of some of the fragilities that people are worried about in the economy right now? If consumer spending were to slow down more sharply, then certainly those would impact those restaurant revenues and other forms of places where you see a lot of that frontline hiring. Where are the concerns around those fragilities?
I mean, definitely there is some concern around fragility and a lot of attention that will be put towards September when we see the news on the rate increases and so forth. However, the real news story right now is how do you get prepared for what will be probably the largest travel season in history. And so when we think about businesses that are in the segments that I mentioned, it's all about how do you address the hiring needs? How do you onboard individuals very quickly? And how do you retain the employees that you already have? And a lot of that comes down to doing more with less. Mm-hmm. And I think that to your point, even if there were to be a downturn in the economy and in consumer spending, doing more with less. How do you optimize your labor in a way that you need less individuals on your payroll is a key topic that is being discussed across boardrooms in all these organizations. And that comes down to productivity, efficiency, as well as retention. Right. It costs a considerable amount of money to hire and train a new frontline employee. And ultimately, how do you provide the best consumer experience? Because as we all know, consumers are more fickle than ever.
Is it doing more with AI, therefore?
I think AI is definitely a part of the solution in order to drive efficiencies and workflow automation in the field. It does not replace the frontline worker that is working at a desk at a hotel or an associate that might be working in a retail organization. But AI is definitely a big part of the solution, along with tools that enable people to have clear directions on what they should be doing so that they can shed some time off of that activity, training, upskilling, as well as flexible scheduling. I think the way that organizations need to staff is going to change. Rather than staffing by location, crowdsource the labor around an area.
How does that longer term affect the data that we're currently gleaning from a jobs report, therefore? Are we going to get more month-by-month volatility? Are we likely to see basically a more efficient and effective use of people at the right time in the right place?
I think for sure we're going to see more efficiency. Time will tell how that plays out in the reports, but definitely the Gen Z, as an example, in, let's say, restaurants. There's going to be 500,000 plus jobs that will be added to the restaurant segment, according to the National Restaurant Association this summer. 20% of those individuals will be Gen Z workers. And they're a native digital generation. So the expectation actually is to have more digital tools to do their jobs more effectively. We've actually seen in our customer base that when you don't have those tools for those digital native workers, that you actually have a loss of productivity. So definitely we will see a much more efficient, much more productive workforce, particularly in the frontline space. And I think the time will tell really what the impact will be on the job numbers.
I have a few questions about the near term as well. You know, there are concerns about the market, as we have talked about. The payroll growth is slowing, but you've pointed to a lot of optimism